Hello everyone, this is Alfonso Moreno from Set and Forget Online Trading Academy. In these free webinars, I'm going to analyze all type of markets, Forex, stocks, and cryptos using the forces that drive all the markets, that govern all the markets, which is supply and demand imbalances. You like it or not, supply and demand governs our stabilization and our lives. And the financial markets are no exception. So in these webinars, I'm going to go over all kinds of different assets using supply and demand, and you will see how these imbalances play out like magic with surgical accuracy, laser beam accuracy. Let's get started. Let's analyze some assets. So let's start with the euro dollar. Okay, so this is the most traded and the most liquid Forex cross pair, a major. As you will see here on the chart, we have the watermark. We are going to see always in this webinar the watermark in the middle of the screen. And you will see the asset, the name of the asset, in this case the euro versus the dollar, the daily time frame, the 1 month, and this is the name of the asset. Okay. So I'm going to be using price action and supply and demand analysis. And this has nothing to do with support and resistance, even though many people out there still say it is the same, but it has nothing to do with support and resistance. Support and resistance is like lines across the chart, like happened to match previous areas where price rebounded. And like this, for example, I don't know, let's say like down there. Okay, it's just like lines just holding, and then there previous support or resistance lines that hold over time. So let's see, we zoom out over here. So we have here like an area of support, price drops, respects those areas. Okay, that price level is usually a price level. Okay, but supply and demand is not like that. Okay, it's a zone, an area. For example, here we've got on the monthly time frame. I know the audio is delayed. I don't know what's going on with my mobile while I'm recording, but I'll fix it on the next one. So here we've got an imbalance, and this is not support or resistance, because support will be like a line over there, but an imbalance is made of a basing structure with a proximal line and distal line. So when price gets down there, if it is a valid position, okay, I'm not saying that this is going to hold or this is a trade, but our entry would be like here at proximal line at 0.9998, and our protection would be like this. Okay, so our trade would be like here. This would be our risk, and that has nothing to do with support or resistance lines. Okay, many more things. But in these webinars, okay, I'm going to be analyzing some charts and forecasting what could happen in the following weeks and months. Okay. And sometimes some trades will pop up, okay? Hopefully some of them will. So as many of you suggested a few assets, I'm going to go over all of them, okay? And read some of your questions. There are quite a few people over here. This is my first webinar after a long time, many years. So I will be holding these webinars once a week, probably. So if you are in my list, you will receive a notification for the next webinars. So, having said that, let's continue. So here, on the euro dollar, we've got a monthly imbalance. This is a monthly imbalance over there. Very strong rally. You can see the strength of the candlesticks here. Very wide candlestick body, closing very high at the candle range. Okay, this is the high, this is the low, the opening and the close. So this is like closing at 90% of the range that goes from the high to the low. Okay, then we've got an even larger, well, it's not a larger ERC candle, extending range candle body, but it opens over there, hardly no wicks here, hardly no upper wick, and that's strong. Okay, and then here we've got a wick candlestick. Okay, so it's like the rally is coming to an end. Okay, and here we've got an imbalance over there. So that one has got control of the euro dollar. So the euro dollar has been rallying for a long time, I recorded a video a few months ago, also previous videos that you can watch on my YouTube channel, and I was predicting this rally like with 1-2 years in advance. Okay, so how can I do that? Because I am not like professional. I don't have any like degree in economics, or I'm not a banker. I never worked for a hedge fund. I've been a sales instructor. I've been a photographer, web designer, and now I'm trading. So if I can do this, then why can't you? You may be wondering. So the thing is this. So why did the euro dollar rally so strongly? Okay, without like it reached like the parity level. Well, the parity level was there. It went underneath like 5-6%, and then it reversed. Well, that happened as I explained on a video, okay, that was recorded like here probably. I don't remember very well. It's on my YouTube channel and also at Self Online Training Academy. And that was a bigger time frame imbalance over here, which was on the 12 months. So if we go here, oops, sorry, but the euro dollar, this should use the ICE data, okay? So here we've got 12 months, okay? So we've got a very strong amount, 12 months. Each candlestick is a 1 year of time, okay? 365 days. So when price hit that proximal line after years, I've been talking about this imbalance for many months, okay? Look what happened. Price was rallied and about 18%. So if you were thinking of going short on for swing trading on the euro dollar or even smaller time frames, you've got a problem, because what happened over there is that the euro dollar rallied strongly and ended up creating an imbalance over here on the monthly. So right now we've got that one over there, and it's taking control. So going long is too aggressive, because this could help the euro dollar drop a little bit farther to smaller time frame imbalances before it starts rallying again, okay? But it could stop there and start dropping. So right now going long on the euro dollar is very aggressive, and probably the dollar index, as we will see, it's doing the opposite. Yes. So on the dollar index, we've got a demand level over here, okay, that has taken control. And the same happened on the 12 months, okay, as I explained on another video. So the dollar index, the XY, on the 12 months time frame hit that area of supply. This is not resistance, okay, an area of resistance. This is not an area of support, obviously, because resistance is above price and support is below price, current price. So what happened here is that it reached that super strong imbalance the last time. It was created like during 2002, 2003, okay, and then after, 2002, yes, many years ago. So when it reaches that imbalance years, okay, later, like 20 years later, what happened? And we were talking about that, okay? So now that the dollar index has reached that area of demand on the monthly, going short is not a good idea, okay? Unless this is eliminated and we've got another area of demand right there, okay? So this is what we have on the dollar index, and what we had on the euro dollar is the same thing but upside down, because they are highly correlated. Whatever happens in the euro will probably happen, not always 100%, but with a very high degree of accuracy. They are like sort of not pegged, but they go hand in hand with each other, okay? So we've got that supply level over there. So on the smaller time frames, when we look at it, the euro dollar is dropping, okay? If we moved at 4-hour imbalance over here, that was holding before the end of the year, okay? And it's been dropping, okay? And now we've got an area of supply over here and there. It just could return in the next 2-3 days, and from there continue dropping, okay? Because here we've got a tested, what happened there? Tested imbalance over there on the 4-hour that played out really well, and then going long here is not allowed. So the euro dollar will probably continue dropping much further, and there is room for the euro dollar to go down all the way up, all the way down to at least over here, and it might continue to drop unless it reverses. Okay, so for now it's just not a good idea to go long, it's just a short bias. Okay, so now we've got covered the euro dollar and the dollar index, the DXY. So let me see the list of assets that some of the members and other traders, remember this is like the first webinar in a long time, I will be interacting with you in the next ones. So let's take a look at the Aussie Kiwi, the Australian dollar versus the New Zealand dollar. So this one, when we look at, let's take a look at this, over there, yes. So on the weekly, we've got this imbalance over here. We've got another one over there. And this imbalance is, look at the strength of this imbalance. And again, we have 2, 3 very large candlestick bodies, and when that happens, we usually, and regardless of the time frame, this is the 1 week time frame, this is the Aussie versus the Kiwi, okay, Australian dollar versus this New Zealand. When this happens, we have to wait for the pullback, and this is a weekly time frame. So if you are used to using the 1 hour time frame, this is like, wow, what do I do now? Okay, so you will be going short on the way down, because your strategy, other strategies, supply and demand is just one of the many trading methodologies out there. Supply and demand is waiting for the pullbacks. Okay, you wait for the dips to go long, or you wait for the pullbacks to go short. Okay, to imbalances, supply and demand imbalance. So it has reached this imbalance over here and is still trying to play out, as you can see. It's been tested once, twice. The reaction over here was very strong as well. Look at how wide these candlestick bodies are. So that's a very good sign. So price, when that happens, then price goes down again, the same area, and then from there it rebounds again. So when you see these strong impulses, not all impulses are imbalances, as explained in the course, okay? This is a course that I have that explains every detail of the imbalances. As you can see, I'm not using any indicators, no oscillators, no MACD, no Bollinger Bands, no volume analysis, no fundamental analysis, no news, nothing at all. We don't need it. And I mean, I could show you some emails I've received from some admirers, quote unquote admirers, telling me that I know nothing about the markets, that fundamental analysis has to be used. It's just insane. Insane. But I don't know, people out there just bored, I mean, and they just find a prey like me and others, and they have no life and just criticize others for what they're doing. So that's the easiest thing. That's human being. Okay. So good. So here now price is reacting. So if we take a look maybe at the daily, okay, we're gonna see that imbalance on the daily. So that we were waiting for price to drop down there, and it took maybe 3-4 weeks. And when it did, what happened? Okay, and that's what we were expecting. And I believe, let me take a look at it. So this is a website, sellandforget.com. If we go here, yeah, okay, there it is. See, expecting this on the weekly time frame that was posted like October 16th. Then the daily demand level that was posted probably before. I would have to go 1 page back. So it's rallying, still control, rallying, okay? New imbalance over there, but it never pulled back. So as you can see, these imbalances are shared with you, with the members, way before the pullback happens, okay? That doesn't mean you could say, okay, if price is going to drop down there, then why don't I go short? But I'm not saying that this is going to happen. This is the most likely scenario. So if I assume this is going to happen, then I'm going to go short. But what happens if price reverses and goes like that? Okay, that's very easy. It happens very often. So I am expecting that to happen, and I'm just patiently waiting for price to drop down there. And that's what it did, okay? As you will see also on the weekly, price, we just had to wait. Price will rally for 3 weeks. In the meantime, there will be other cross pairs and stocks and ETFs, cryptocurrencies that will be providing us with other trade opportunities, okay? But in the meantime, if price hits that level, and this you could call that an area of resistance, why are you going to go long there against a resistance? Okay, not a good idea. This is demand, this is not support. Okay, so when price hits that, let's say, resistance level around 110, then we are expecting this as per supply and demand analysis. Okay, the support system could say, okay, I'm not going to go long against that. Okay, so maybe you've got some other strategies that will tell you, yes, now I will see, like, I don't know, pink candles on the 1 hour, 4 hour, the daily, and then based on that, I will start trading shorts, taking shorts on the way down, okay? So these imbalances, as you can see here, they can be used to trade other strategies, because maybe price hits over there, that level, over there in the monthly, also in the weekly, at around 107, and then you say, okay, this is good for going long, so I'm going to use the smaller time frames, the 1 hour or whatever, even smaller time frames. Let me see when that happened on the weekly, which was like here. And then you will add some kind of indicators or oscillators for the overbought, oversold, CCI, MACD, the crosses like I don't know, 10, 20 EMA or whatever EMA crosses you're using, and then you will say, okay, now I'm going long. I'm going long because I have the support of that imbalance in the weekly. Okay? And why was this deleted? Sorry. So you can use, and then here as well, but I'm not saying to use them, I don't need them. Okay? I just use supply and demand. I'm not using any oscillator or indicator. And which indicator, somebody is asking me, which indicator or oscillator do you recommend? I just can't recommend anything because I'm not using them. So any indicator or oscillator will work if you test it thoroughly over a long period of time, and not just because, okay, now it's an imbalance, let's see what happens. So you have to analyze what happens with those indicators and oscillators when these imbalances take control, and what happens in the smaller time frames, because you are probably going to use the smaller time frames to plan trades. Okay, so on the Aussie dollar, as you can see, that's what we are expecting. And if we go to the monthly, let's see the monthly. Yeah, new bullish price action. Let me delete all these objects. Look at the strength of this lower wick. Okay, it's insane. Okay, and then within those pink candles, those are other strategies. There are some people that use these pink candles, and when price retraces into the middle half of it, they will take trades. So, I mean, there are so many trading methodologies. I'm just pointing out a couple, okay? But I'm using supply and demand. But if you use as the ground, I mean, as the wireframe, this is supply and demand. So it's like, okay, we've got here another one. That's a demand level, and this is also a demand level. Okay, so when it hits that demand level, look what happens. You see that pink candle on the monthly, and then you can start using the smaller time frames to plan trades using them. Okay, you drill down your entry to smaller time frames. So as I said, some people out there, I'm not using this, but I've seen people doing that. They will use, this is monthly, but it could be like 1 hour or the daily pink candles. They will wait for price to be within the pink candle, half of it, and then they will start placing trades. The problem with the pink candle is that obviously you need to have your protection down there. Okay, you just can't take that and say, okay, I'm going to protect it with 1%. Then you will be kicked out very easily. So, but with supply and demand, we know that this is the proximal line, this is our entry, and the protection should be underneath. So if this was like a 4 hour time frame, that will be it. Okay, that will be our risk from here to here. So now we can see these reactions from the monthly demand level, pink candle. The lower wicks are also wide, and then here we see bullish price action. And this is, let's say, this could be like a resistance level, okay? On the weekly, probably will be seen better, yes. Like price hit those highs over there and then it reversed again and reversed. So will that happen again? Well, I don't know. Nobody knows. But if price gets there, don't go long, my friend. It's silly if you're using support and resistance. But if it goes down there, then we can start thinking of longs again. And that is what happened here, there, there, and there. And then you can use whatever trading methodology, okay, to plan trades on the way up, okay? But definitely longs and not shorts. Okay, but if penetrated level farther, we can go short. Nope, because it can because price can reverse at any time, as you can see, okay? So let me read. Okay, nothing there. Just confirming what I'm saying. Okay, let's take a look at another one. And this one, it's nice. I like this one because this is the euro versus the Icelandic krona. I've been to Iceland, many times. This is one of my favorite countries. It's insane. I've been there alone for many weeks with a car, my camera, and drone, and all that. I just love it. And it's not great, I mean, to go there because prices rally like 10%. So if you go there when you if you use Forex analysis, or like I did during the summer, after summer I went to Turkey with the family, and the euro, I mean, versus the Turkish lira was incredibly strong, and now it's even stronger when we go to the daily here. When I was in I was in Turkey, price was there, over there. It was doing nothing. Okay. So when I went there, I just exchanged all the money I wanted to spend so I could have a fixed fee just in case the Turkish lira dropped and then my trip would be much more expensive. But this is what happened when I was there, 2 weeks. I mean, very stable. Price just oscillated like 2-3%. And then after it came, then what happened? That, okay? It just rallied like, again, 12%. So if I went or you went to Turkey on holidays, now from a European country, the US dollar looks exactly the same, but with the price action is not as good. Okay, look at this price action. This is going to be eliminated. I mean, the Turkish lira is going to be dumped anytime soon on the euro, against the euro, and also against the Turkish lira, against the dollar. Okay, when it's not going to happen, I don't know, but it's going to happen. It's not a matter of if it's going to happen or not. It's when it's going to happen, but it's going to happen. Okay, so you can use that also for traveling or for other things. Okay, so price continue to rally and rally and rally on the euro versus the Turkish lira. So let's go back to the euro versus the Icelandic krona. I'm going to be analyzing also cryptos and some stocks, okay, and reviewing some of the stocks I shared on previous video analysis on YouTube and also on the trading community, okay? So, by the way, if you like this video and you are watching this recording, click on the subscribe button as well so you can get notifications for new videos that I will be uploading every week from now on in 2024. Today is the 2nd of January 2024. New year happened like barely 2 days ago. So, the euro versus the Icelandic krona. This is the weekly time frame, okay? Price action on the weekly is even like, wow, this looks like a daily chart on the stock, okay? With lots of gaps everywhere, little gaps, okay? Because these cross pair or exotic pair, as many people like to call them, like the Turkish lira is also an exotic one. Also the Filipino peso, the Manian, Liu, many others. Okay, so here we've got an imbalance on the weekly. Here we've got another imbalance on the weekly. So price is reacting super strongly, okay? And that's great for those who are traveling to Iceland, okay? Also, obviously, for bankers who are exchanging money and all that, and for companies that are in the Eurozone are getting better value for the euros. Okay, so why is it rallying? Okay, let me do this. Oops, because that wick over there is just insane. So let me use another, probably. No, on that, no, we only have ice. So I don't know if that really happened. That wick is just really, really strong. So on the monthly, this is what we have. We've got a very strong imbalance on the monthly, and then we've got another one over here. Okay? So these imbalances, look at the strength of this one. So we see such a strong impulse. Look at how large this candlestick is. Okay? It's like, how much? Like 11% in a month. That's insane. That's a lot for a currency. Okay? That's nothing for Ethereum or Bitcoin, which could move like 50% a day. Even many cryptos. So here, very strong. So when that happens, we have to wait. So okay, now I have to wait for a year. What can I tell you? You have to wait. If you want to trade there, obviously, all the way down, you can use smaller time frames, other strategies, and all that. I mean, supply and demand is just one of many strategies. So, and it's not a breakout strategy. Okay, so you could say, okay, this is a resistance level, and then when price breaks above that, I'm going to use breakout strategies to go long. That's not supply and demand. Okay, supply and demand is okay. Now I'm seeing the footprint of a dinosaur. I have to wait for price to get down there, and from there I will go long. And here the same thing. We are talking about the monthly. Okay, this can be used on any time frame. Okay, I'm just using this because supply and demand and the bigger time frames, if you've never heard of it, can be so powerful. Really, really powerful, as you will see in this webinar and all the others that I will be recording. So here we've got a supply level. So there we should stop. Okay? So buying. So now price got there and then it hit that area of demand on the wick, and it has formed a new area here on the wick down there. It has been trying to drop on there, but it never did. Okay, so this is also strong. It has this gap as well, another gap. So when this happens, forget about going long. And here you could say, okay, now we've got a resistance level, so we don't go long anymore. And now we're waiting for the pullback. Okay, so that's what's going on with the euro versus the Icelandic krona. And when I go here to the website, I look it up. Euro dollar versus, okay, so we've been talking about these levels for a long time. Scroll, okay, monthly demand level, playing out, new monthly demand level over there, trying to reach, no pullback to the week, to the, what you should say, monthly, made a mistake, no pullback to the monthly, still waiting. The monthly was hit on the 31st August 2023. And now price is rallying, still trying to, okay, on October, I need to update this. So here, as you will see, that's the monthly demand level we are talking about, okay, over there. So since that level was reached, look what happened. So this was mentioned months before price even got down there. I didn't take into consideration any announcement, any GDP or interest rates for the Euro Central Bank or the Icelandic Bank Central Bank, if there is any, I'm not sure. Okay, there should be probably, or maybe not, because these guys did something completely unexpected when the crisis happened many years ago. I mean, they went against the bankers, I believe, the only country in the world, I believe, and now they are really doing really well. We should learn a lesson from them. So that's why we should take into consideration imbalances. You need to know what is an imbalance, why is that an imbalance, because this is not an imbalance, this is not an imbalance, it's impulses. All imbalances are made of impulses, but not all impulses become imbalances. So right now, buying is not a good idea. As you can see in the monthly, that large upper wick tells us that we shouldn't go long. I mean, why should it go long there? And this, if you could say this is a resistance level. Okay, when price got there in the past, look at the wick, and here again the upper wick. So no longs. So we are waiting for the pullback to the weekly or even lower. So this is the euro dollar. Sorry, the euro versus the Icelandic krona. Let's take a look at another Forex cross pair on the list. Yes. Okay. Pound card. So this is the pound card. Okay. So on the pound card, this is what we have. Let me do this. So look at this. Let's analyze price action, because price action, in my humble opinion, some people might not agree with me, is the only non-lagging indicator or oscillator. Because when a candlestick closes, it closes. That's it. I mean, if today is the 2nd of January 2024 and this candlestick, it will not, let's go to the daily, okay? Closes at this as 168, then it closes at 168. I mean, tomorrow or at 22, 23 hours today, depending on your GMT, sorry, in Europe, the candlestick will close and it will not open at another price. I mean, it will not unclose. When you use the EMAs and oscillators, you can see the EMAs or the moving averages cross and then suddenly they uncross, because there is like there's like a lot of volatility for something, maybe news or whatever, and then they uncross. So you've got a strategy that will tell you to go short if the certain EMA cross down, and then okay, it's crossed down, and then when you look at it again, when you are in a trade that has been some news or whatever, or an imbalance to control over there on this bigger time frames, and then the EMA will cross like that, and then suddenly they are like this and not cross anymore. Okay, so I've seen that in the past when I traded 6 and the 12 EMAs together with the MACD. That was the first thing I did in the beginnings, many years ago, and I've seen that so many times. So that's why I'm not using them. But you can use them if you know what to do with them. Okay, so why is the pound card dropping? So look at this. We've got pound card here. Look at that. Price stays there for a few months and then it drops heavily. Okay? And it drops like, I don't know, 17%, 17%. Wow, that's a lot. So when that happens, forget about going short. Okay? And now look at this candlestick. Super large wick, a wick which is like 8% wide. That's a lot. Well, that happens after a very strong plunge. The cross there, the cat got stronger versus the cable, the pound dollar, British pound. And then when that happened, taking profits happened, and then it reverses. Where did it reverse? To the supply level at the top. And it's been dropping ever since. It's taken a few months. It got there like in May 2023, many months ago, and then like 8 months later, it's trying to drop, okay? So all the way up, you can use smaller time frames to go long, because after this, we consider this asset, this cross pair, like oversold, let's say. So if it is oversold, it's not a good idea to go short, to keep on selling, because it's oversold, okay? So, and then you see this price action, blah, 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 and then you can use smaller time frames and other strategies to go along the way up. But when it gets up there, stop. No more longs. No more long shorts, okay? So, let me see. Let me look it up. Pound versus the CAD. So, this is what we have. Go back in time. This is the weekly. So because on the weekly time frame, we were also expecting the same thing. So there, on the weekly, that's what we have. Look at the strength of the impulse. Why is that happening? Because we have a monthly imbalance over there. And look at what happens. 1, 2, 3 very large candlestick bodies. And when that happens, we have to wait for the origin. And that's where the pullback happens. And then we sell. And this is what I was expecting here. As you will see, price got to the weekly supply level on the November 15th. And look at the candlestick that was being formed at the time on November 23rd, okay? Like a gravestone doji saying, hey, I want to go down, I want to drop, help me, sell with me. And that candlestick was this first one that looked like that because it was like in November 23rd. It was not the end of the month, so during the month, price rallied a little bit more and ended up creating that bullish candle over there, okay, at the end of November. But then it just printed a high and then shut down as expected. You might say, oh no, this is going to be broken, blah, blah, blah. No, it wasn't broken. It just dropped. And it printed new lows over there. And it kept dropping. So that's the power of supply and demand. You need to know when, what to do, when these imbalances are created, what to do with them, why this is not an imbalance, why this is not an imbalance. Okay, but this is an imbalance. Those are many rules that will tell you if those are imbalance or not. But in this case, I'm just explaining what happens when strong impulses are printed on any chart, any time frame, any asset. This is valid for any time, okay, any time frame, any asset, crypto, forex, ETFs, anything, okay? And it's just like magic, okay? Okay, so let me look it up. This is what's going on here with Brent crude oil, okay? And this is funny because I recorded a video when price was here, there, up there, during the Ukrainian war, the attack of Russia to a sovereign country like Ukraine that happened, well, long ago. It looks like close, but it happened long ago already. But it's not going to finish. It looks like they're going to stay there forever and ever. But the thing is this, that we've got an imbalance here, okay, on the monthly. And this is where the Ukrainian war happened during February, I think, to 2022, middle of February, I think, the beginning of March. I think it was the middle of February, okay? So this is the Ukrainian war happening. Russia attacks Ukraine. And then the whole world is talking about, like, wow, oh my God, now oil prices are going to rally, soar, and go to $200 per barrel, and it's going to be insane, okay? Like in COVID-19, all lies, okay? Why did that happen? Why didn't it rally more and higher and higher and higher, okay? Because it hit that monthly supply level, okay? And it has been explained on many videos on my YouTube channel and also trading community. Instead of forget. And the oil prices, I mean the gasoline, the diesel, okay, in Spain and many other countries, like double their prices. But Brent, okay, crude oil dropped 44%. Okay, so think about it. Obviously, the price of the oil barrel does not exclusively depend on the price of Brent. I mean, here, but also there are other variables. Okay, but think about it. I mean, this is some food for thought. Okay, price dropped during the Ukrainian war, where everyone was talking about this. Okay, that the Brent crude oil would rally to 200 or even more, because obviously all the restrictions and all the sanctions to Russia and all that, well, that didn't work. It just price dropped. Why? Because strong supply level had taken control. And if we take a look at crude oil futures, okay, do like this. I have to use the regular one, I think. Okay, there it is. There it is. We should have that one over there, which was even stronger. So that's the attack to Ukraine. And then there's a reaction. Oil prices and all the petrol stations in the world went like crazy, but crude oil dropped 45%. Insane. Just think about it. It all has to do with supply and demand. Everything. You like it or not. Okay. You like it or not. Supply and demand is everywhere. When you buy a pair of shoes, a bottle of wine, a car, a house, anything. It's just there. But when it comes to trading, we'll look at the chart like, I'm idiotized. Like, no, what do I do? What do I do? I'm going to start adding all kind of indicators, oscillators, red arrows, blue arrows, green arrows, EMA crosses, Bollinger Bands, and then when you look at it, it's just like the crab and the tiger and the butterfly, and insane. You don't need that. You don't need any of that. Okay? And there have been many trades on the way up, and all this is described on the forums. Okay? From time to time, I analyze some assets and I share it on my YouTube channel and Instagram. It's just insane. So now we are again at crude oil. At the monthly demand level, also on Brent futures. Okay, so we are there again, and I believe we should have a weekly demand level somewhere. It's not that strong over there, so we could see this happening. Hopefully, it will not. Okay, because I would love this to happen, because gasoline prices for my motorbike and my car would be much cheaper. Hopefully, because that didn't happen over here. Remember, during the war and the sanctions to Russia. And hopefully this will happen. This will happen. But it looks like it's not going to happen. So we need imbalances, and you can now start using smaller time frames and oscillators and indicators. If you've got those kind of strategies that you have thoroughly tested, you could use them to go long. If those strategies provide you with a trigger, with a trading opportunity. Okay? So, this is Brent crude oil. Let's take a look at gold, which is also very important. Spot gold. So, spot gold, this is all-time highs. Okay? This is the highest price for gold, spot gold ever. It reached like $2,147. That's insane. Okay, so in the bigger time frames, you will see the classic resistance. Okay, there. Let me draw a line like that. Okay, that could be like classic resistance. Every time gold reached these prices at all-time high, okay, then it just dropped. Okay, and now what do we have? So going long is quite aggressive, okay, because it could just reverse. But there was a great imbalance here in the weekly time frame. There was one, no pullback. There was a pullback, and here there was a pullback. Okay, so price rallies for 2 to 3 weeks. We need to wait. It tried to reach that imbalance at 1800, couldn't. Price reverses from here and then rallies and creates another imbalance, which is located almost at 980. Okay, and then it hit that imbalance and then rallies strongly. So now we could say that gold is at a resistance level. Okay, look at the large ping over there, the upper wick. So going along here is insane. I mean, you go along there, you're not thinking straight, my friend. So now what can you do in gold? Nothing. Just to wait. You have to wait. This position is already playing out, and we are at a resistance level. Look at the strength of this upper wick and also the large body that allowed gold spot to reach that imbalance at $1,980. And it has been playing out ever since. But do not think of going long right now. If you do that, I think you should be thinking of, well, you should not be a trader. I mean, because it's going against any common sense, okay? But probably if you are using the smaller time frames, or even the 1 hour, you won't realize, okay? You will still see some reason to go long gold, probably, okay? But it's not a good idea, okay? But these time frames, the weekly and the monthly, are time frames that almost nobody looks at or pays attention to. And that's where the big boys are located, are placing their positions, or at least that's where we see what they are doing, okay? So, and if we take a look at, let's take a look at silver, okay? Same thing, another weekly demand level over there, which played out really, really well, and another one over there, which played out really, really well, okay? So, strong rally, correction, strong rally, correction, okay? So, that's what it is. You need to pay attention to this candlestick, how large these bodies are, and that will help you make a decision. So going long right now, it's already playing out. So on the daily time frame, we've got that one didn't pull back. So here is just a mess. We've got a long bias, but right now going long is not a good idea. This is going to trouble there, where the alert is set, probably. So both gold and silver are rallying and reacting, so similar imbalance on the weekly. And if you are not using the weekly time frame, you can read in the watermark right here, XAGUSD, 1 week of time. This is silver versus the dollar, the US dollar. So if you are not using the bigger time frames, you are not going to, you will be unaware. It's like being blind to the psychology of the markets and what the big or the smart money is doing, okay? So this is like great, okay? This is like great. So I've got a list here as well of others. So we've been like an hour. Let's continue a little bit more. So let me see the list. Okay, let's take a look at this one. A big one. So Expedia, for example. Expedia is one of the stocks Expedia is one of the number one, number two online travel agency in the world, okay? Together with Booking.com, they are the biggest one, the biggest players in the markets. So, in this market, this sector, okay? So Expedia, we were talking about this one. So Expedia, there's a video recording on my YouTube channel, you will see that. Also a short, I think I recorded, where this imbalance on the weekly was mentioned. Okay, I don't know if it was over there, and even there. I think it was there. The imbalance had not been reached yet, and I think yes. And then what happened? In May 2023, probably at the end of May, that imbalance was hit over there, as you can see, which is located at $88, and then from there it just rallied strongly. Then price dropped down there. And then again, and it has created another weekly imbalance over there, okay? So right now, Expedia has got a lot of room for to reach that imbalance on the weekly, which is sitting at $181. But it's been dropping around for, well, 1 week, and now this is just 1 day, today, the 2nd of January 2024, dropped 3%, something like that. This is not an imbalance, so we just can't do anything. So the imbalances are lower. We probably will react from here. But right now, trading Expedia is not a good idea. The trade already happened, and now we need to wait. It's after such a strong rally, probably in the monthly, we're going to see that much better. There it is. You see? On the monthly, this is the weekly. Okay? Look at that. Very strong rally. And on the monthly, the supply level is a little bit higher. So Expedia still has room to reach that strong supply level at 195. So still room to rally 32% more. But buying after such a strong rally is not a good idea because it usually does like this. So that's Expedia, and this is a very important stock, okay? But big ones, let's take a look at some of the big ones. I don't know, like Meta, Facebook, Meta Platforms. So Meta Platforms, look at this. Look at this imbalance over here on the monthly. Just insane, okay? How strong it is. It just happened and it shoots up. Incredible. This started to happen at the end of January, so December 2023, like a year ago. So now on the weekly time frame, this is like, if it ever gets down there, insane. That's the strongest imbalance ever. Look at this rally. There's nothing like that anywhere on the monthly time frame. So this is like textbook, which is insane, super strong. So now, what can we do with Meta after that? So on the weekly time frame, we've got an imbalance here and another one over there, but they're weak. Okay, you need to use other strategies to go along from there. Okay, after such a strong rally, that probably will play out. Some weak imbalances here with the SPY, the S&P 500 breaking all-time highs, a new demand level over there, and then we've got the Qs, Nasdaq breaking all-time highs, same thing. Okay, but now the end of the year, now they are trying to drop a little bit over there after breaking all-time highs. So, and now we've got also Nasdaq. What's going on here? Another imbalance over there on the monthly. So all-time highs being broken on the major indexes and ETFs, Invesco, QQQ, the Qs, Nasdaq, the SPY, S&P 500 also broke all-time highs. Well, almost, no, it didn't yet, not yet. Nasdaq did, yeah, it did by 1%. Those are usually fake outs, and now it's going to drop. That happens very often. So breakout strategy there. Okay, all-time highs broken. End of the year breakout. Not a good idea. Okay, not a good idea. So Dow Jones, DIA, already broke all-time highs, and here we've got an imbalance over there on the monthly. So it could drop down there, or a little bit higher. Yeah, just the imbalance. So we could see a retracement now after breaking all-time highs after the new year. In December, I think it broke it. Broke it like there in the middle of December. Okay, so we've got an imbalance here on the weekly, on the monthly underneath, or it could drop down there and from there react. So all-time high. So summing up, okay. Dow Jones, SPY, S&P 500, and Qs, Nasdaq are pretty all-time highs. SPY, S&P 500 not yet, but it's going to happen almost for sure. And they're going to keep on rallying and rallying and rallying, probably, hopefully. It's overbought, obviously. So going long, it's aggressive, but it's the only thing you can do. So we've gone over some commodities, spot gold, spot silver, crude oil, Brent, the major indexes, and the US, the dollar index, the euro dollar, Bitcoin, Ethereum Classic. So let's analyze other stocks. Like McDonald's. I'm feeling hungry right now. So McDonald's. So McDonald's, what's going on here, my friend? McDonald's on the monthly chart is like, this is Dragonfly Doji, I believe. The Gravestone Doji is, Gravestone Doji, I think, which is a cross. But usually the Gravestone Dojis are at the top, but this one happened there. And why is it happening down there? That's my question. We have a demand level here in the monthly. Okay, but if we go to bigger time frames, we've got this beauty over there. So this beautiful imbalance on the quarterly chart sitting at $246 per share. Look at that. It kisses the level. Kiss and go. This is what I call kiss and go. And it just rallied. Why is it not responding? Okay, there. 21% in 3 months and 1 day. Incredible. So if we don't pay attention to these imbalances, we're going to miss a lot of trading opportunities. But if you are obsessed with smaller time frames and intraday and watching charlatans out there saying that you are going to become a millionaire overnight, well, you know what happens. I'm not going to say it. You know my answer. So this is where the community and the set and forget community comes in very, very handy. So look at that. Look at that. There. July 7th, 2023. Hey, McDonald's, we are expecting this. Don't go long. I know my audio is delayed. I don't know what's going on, but you will see. Nope. Shorts. Shouldn't. You shouldn't either, unless you have other strategies. I mean, I'm not going to go short, assuming this is going to happen, because this could happen. This is the most likely scenario, but hear me well. Most likely. That means probabilities. I'm not assuming this. I am expecting it, and it's very different. Very. So, this is what we're expecting. And then price continue to drop, and around October 10th, that's what happened. McDonald's hit that demand level sitting at $246 per share. And then it continues to rally a little bit more. Okay, after a few days, rallying there to the weekly supply, reacting to it, and that's the last update, I think, 23 hours ago. So look at that, and it's trying to print all-time high again, and probably will. Okay, so that's the power of the imbalances, and this is supply and demand. Sorry, and this is not support. No way. Okay, so nobody will. If you ask anybody, draw an area of support on McDonald's, they are not going to do this. No way, my friend. No way. So McDonald's is great. I don't know. Another one. I see the list there. So these are great trade opportunities. Coca-Cola. Coke. Coca-Cola has some tickers. Here we've got the same thing. We've got the 3 month demand level to control again and again, and then it's rallying strongly. And when we take a look at the smaller time frames, okay, we've got an imbalance there on the weekly. And it's trying to rally, and Coca-Cola is going to break this high. It's going to continue, and hopefully will, and it will, because it's got a very strong demand level in control. And as you can see, we've got bullish price action here, a new bullish price action. And once this is eliminated out of the way on the daily, we've got that impulse over there, which is very weak. And once this is eliminated, there's more room for profit over there. So Coca-Cola is great. And if you take a look, another one, Coke. This one is optionable, but Coke is not. Coca-Cola Consolidated is not. And Coca-Cola Consolidated, if we take a look at the monthly, okay, this is a great trade over there. Look at the strength. Very strong rally, and then we wait for 3 months or so, and then it hit that level, the $415 per share in September 2022, and then it's been rallying ever since. And now we've got a similar, what's going on here? Imbalance over there on the monthly. This is very similar. This is even stronger. Okay? So, waiting for the pullback. Will that happen? No idea. No idea. We are talking about probabilities. Trading is about that. It's a game, a numbers game. You have to wait and wait if you're using, obviously, supply and demand imbalances and other strategies. Okay? We have to practice the art of waiting. That's it. Okay? But there are so many stocks, so many cryptos and Forex pairs and other assets, ETFs, that no matter when, there will always be some trading opportunity. Okay? And you can have a life, and you can enjoy free time with your loved ones and have friends and enjoy with them and not being obsessed with the New York market open and the London open. Oh, let's run because I'm going to trade the FOMC news and all that. I mean, I did that in the past. I'm not doing that anymore. So I'm using the bigger time frames. I'm obviously supplying demand imbalances. So there's another one called, I think it was CCEP, Coca-Cola Europe, the Euro-Pacific partners. And this should be, same thing. Okay, same thing. And a new one is being created over there. And look at that, strong rally, and then it takes a few months and then it drops because this is the monthly time frame, remember? Okay, it drops down there and it's been rallying ever since. And if we go to the weekly time frame over here, we've got another imbalance over there. So will it drop down there or will it continue to break all-time highs? So all breakout traders should be long already, but going long after a very strong rally is not a good idea. As you could see before on SPY, I believe, on S&P 500 ETF. So, that's for those who trade breakout strategies. I'm not doing that. Have some rules for that as well, but there are so many trade opportunities using imbalances on the bigger time frames that I have no more money to trade. So this is just insane. Okay, so this is another example, and I believe all these should be analyzed here. I don't know, CCEP, Coca-Cola Euro-Pacific partners. Let's take a look. The CCEP month time frame there, in control, and there it is. Monthly uptrend, new aggressive imbalance at 1, waiting for the pullback. It did pull back, it's rallying, it's trying to rally, and this was updated like in December 11th. Okay, so today you already broke all-time highs last week before the end of 2023, and I will update it soon. Okay, so this is the power of supply and demand. And as you can see, as many of the members are now present, I'm not reading the questions because I asked some of them to tell me what to analyze, and I also had a list. Okay, on the next one, when I fix this delay, okay, I need to speak to the software provider. I don't know why there's a delay with my mobile connected to my Mac, so I will add the interaction that I usually had. So here on the community, we also have a request update where you can request an update for this. Imagine that you are planning to take a trade and you have spotted an imbalance, and I have not updated it because obviously I cannot update thousands of stocks on a daily basis, and stocks and cryptos and ETFs and Forex and commodities. Insane. So you can request that, okay? So I can update it. Okay? Maybe it's hot because you spotted it. I mean, that's how we collaborate with each other. So these are great trading opportunities. Coca-Cola, I don't know, big ones like a Caterpillar. Let's take a look at Caterpillar. Oops, same one. Why do I have that there? So Caterpillar, that's the one, and that's a pity because it didn't pull back, and that's a pity, and I believe it should be here. Caterpillar, yes. It's insane. I mean, in October 4th, I said the dump of this stock continues. Monthly uptrend, new imbalance at 1, long bias. We're waiting for it. The arrow tells us this is an arrow for dummies. Okay, we are waiting for this. If you go long here, there, you are, I don't know, something wrong in your head. If you are using imbalances, okay, and you know what the rules what to do, wanted to do, buying here is stupid. Okay, so price continued to drop, and look at that. It just fell short of it, and I said, by a few ticks. It fell short by, oh no, $1 or something like that. Insane. And it's rallying again. There was another imbalance over there, and it's rallying again. So we've got on the weekly, I believe there should be something on the weekly. Yeah, over here, we put another one. So it's a pity, but that's trading. I mean, you are patiently waiting, and this is the art of waiting, okay? And that's, I mean, waiting and trading has helped me understand who I am and what I am and how impatient I was. And now it has helped me. Supply and demand, I mean, has helped me. Why? Because I have to wait all the time. Wait and wait and wait and wait and wait. Okay? And if you extrapolate that to your daily life, it will help you with your children if you are married, with your wife as well. And you will not be as impatient. But if you are trading intraday, short-term trading, then believe me, you're going to have trouble with your wife if you don't have them already. Okay? But here it's just different. I mean, can take a month. Oh, okay, but in a month I'm not going to be placing a trade. Nope, because there will be others. Okay, many others of the important stocks, liquid or not that liquid. Okay, you can also trade penny stocks. Okay, I don't trade those, but they're cheaper. Obviously, this one is much more expensive, but you can use option strategies to do that as well, to trade them. So this is Caterpillar, and it's a pity that it didn't pull back. Okay, but it's just insane. And I remember today I got an alert. On which one was it? I don't remember very well. But there are, like, I don't know, long-term opportunities on Dow Jones, blah, blah, blah. So let's take a look at this one. This is Verona Pharma, should be BRNA, a biotech company. And the same thing, okay? Look at that. This is all-time highs. Broken. And look at the strength of that impulse over there. Like 100%. So the stock rallied 100% in a month. And then what happens? After a year, more or less, because this is a candle that was printed in January 2023, okay, almost a year later, it hits the monthly demand level. Okay? We forecasted this. We predicted this with laser beam accuracy. Okay? So if we go here, this is the art of waiting. This is someone requested this stock because I didn't have it on my list. Okay? And I added it in June 6, 2023. I added the log and all that, and I said monthly uptrend, new balance, long bias, waiting for the pullback. Located there at $13.60. And the stock had been trying to drop on there. Look at the width of that candlestick. The body is just insane. So it was trying to drop, and then around between October, November, middle of November, the imbalance took a drop. And we are expecting this. Low bias. Mentioned, the imbalance mentioned in the last update is in control and trying to play out. Why? Because this is a strong, very strong imbalance. There's another one over there. But in order to get down there, it needs to eliminate that one. But eliminate that strong one is very difficult. Okay? But if you're looking at the daily time frame, as price goes down, this is like dropping. Oh my God. And probably you are reading some newsletter from, I don't know, so many websites talking about, oh, this stock is being sold, the hedge funds are doing this and doing that, blah, blah, blah. Or there's a new drug that was not, the permission, they didn't get the permissions to, or the trials, they didn't pass the trials, and then the stock is like dropping, and then suddenly just rallies. Crazy. Okay? Why? If you are unaware, you don't know what an imbalance is and how to locate them in the bigger time frames, well, that's why. So here, this is a very strong impulse. This is not an imbalance. This is an imbalance. But obviously, it's a very strong impulse. So if we are long there, we should manage the position or even close it and wait for the pullback, at least a correction, okay, before thinking of going long again. A strong candlestick, not as strong, not as strong as the previous one, has been printed, okay, and it's happening right at the same spot. So you may be asking yourself, or sometimes I do ask myself as well. I've been a salsa instructor. I've been teaching for 12 years, 11 years, how to dance salsa, bachata, cha-cha-cha, merengue in my city. Okay, I taught a lot of people. Now I'm teaching this, coaching this. So I've been a photographer, a salsa instructor. I've also been web designer. And so how does someone like me, okay, have this knowledge? Okay, how can I predict this with such a degree of accuracy? As you can see, and you will see, if you are a member of the Certificate Online Training Academy, you will see. I mean, I'm sharing this every single day. I've been doing this for years, and it just works. Okay, I can predict what price is going to do with months and years in advance. Okay, as you will see if you are a member. And I've got my own tools to scan the markets to make my life easier, and I will focus on the strong imbalance and I will share them as they happen. Okay, sometimes I will miss imbalances, sometimes I will miss stocks like this one, for example. I didn't have it on my list and someone pointed it out and I added it. Okay, I'm added it and then set me alert, and there it is. It's playing out. This is Verona Pharma, a biotech company probably. Yeah, biotech company. So if you click here, biotech, you will see the list. There are like 113 stocks, biotech stocks. Okay, and some of them are hot. Okay, like this one, Structure Therapeutics, GPCR. So this is the analysis. I'm just showing you how it works. Okay, and at the same time we're going to be talking about price action. So look at this. Look at the strength of these candlesticks. The bodies, this is closing like a 99.9%. There's a little tiny dot there, which is the wick in existence. So we're waiting for this, okay? Waiting for the pullback. And then in December, okay, it drops down there and it's trying to rally. So I haven't updated it since December. So this is GPCR, Structure Therapeutics. Okay, there it is. That's the imbalance. So look at this. If you take a look at the daily time frame, okay, you can see that price is rallying. And why is it rallying from there? Well, if you are unaware of this imbalance, then you are missing it. Okay, look at this. Look at these. The upper wick is like 13%, and the lower wick is 53%. I mean, the stock rallied 53% off, bounce off this imbalance in just a few days. Okay, this is the power of supply and demand. This is not support. This is not resistance. This is another imbalance which played out really well. Another one, which will this play out? I don't know, but probably this tells me that it will. Sometimes it won't, but most of the time these type of imbalances will play out. Biotech companies sometimes are tricky because they are very volatile, because they don't pass the tests, and then, well, the investors get rid of the stock shares. Well, a lot of things happening in the background, but imbalance-wise, most of the time, these imbalances play out, okay? This is just insane, as you can see. We've been 1 hour and, I think, 1 hour 21 minutes, all going over all these stocks and cryptos and Forex, and there's only one thing in common. What two things? The strength of the impulse and the patience, okay? But if you are new to trading, probably you've been exposed to what the typical trader is exposed to. I'm going to speak now to my mobile. Hello, Samsung Galaxy. So it's like you've been exposed to intraday trading, short-term trading, indicators, oscillators, news, events, fundamental analysis, following what other people are saying in the news, like on Market Watch or NCMC or any Barrons and all these financial magazines or newsletters on TV and Bloomberg, and then you follow what they are saying. I'm just crazy. I'm subscribed to some of the newsletters, and when I read sometimes what they are saying, I like, oh my God. I mean, but you may be laughing at me right now because, I mean, this guy knows nothing about trading. I mean, he's just an ex-photographer, web designer, and salsa instructor. I mean, I'm not going to trust my money to a salsa. I'm not going to invest your money. I don't do that. But I mean, to buy my courses and to be coached by me, okay? I'm not going to trust my money to a guy like this. I mean, an ex-salsa teacher? What does a guy like that know about trading and the markets and all that? Like I said, I could show you some emails that are insane. People like always reply the same thing. Welcome to my spam folder. You will be having a lot of fun there. It's just insane how bored people are and how bad they feel that someone else is doing things they do not understand and they do not accept, and they just criticize you. I mean, it's very easy to criticize. So you will see, if you are a member of Certified Online Trading Academy, if you see my videos, you watch my videos on YouTube, and now these webinars that I will be organizing every week, hopefully, if everything goes well, you will see how these imbalances play out, no matter what. I mean, these are the forces that drive our lives, our civilizations, our markets. You like it or not. I'm referring to you. You like it or not, I like it or not. It's just like that. You just cannot change it. And we are all great supply and demand traders. Okay? In real life, when we want to buy a car, we want the best price. A house, best price. We go to the supermarket, we wait for Black Friday to buy what? I don't know. I always buy my TradingView subscription. Okay? I consider that this is the best software in the world for analysis. Okay? I'm not selling it. I'm just using it. So I only can recommend what I think is good. So I always buy. Why do I always buy or renew a subscription in Black Friday? Because it will give me like 50-60% discount. That's supply and demand. It's cheap, I buy, and then when it's expensive, I sell it. So that's the thing. So they offer that in Black Friday. Why? Because they want a lot of demand, and when we're going to get a lot of money. We're going to make a lot of money, sorry. So same thing with buying anything in the supermarket, or a house, or a car, or shoes, anything. But when it comes to trading, wow, we want instant gratification. We want things now. Because in real life, you've got a credit card, okay? And then you don't have money. I pay with a credit card. I don't have a credit card. I will go to the bank and I will get a loan. I mean, or I will borrow some money from a friend or a family member, okay? But today, you can just have anything with a snap of a finger, okay? And we are doing that with trading as well, and with educating our children. Everything, fast food, everything is fast. And what I've learned with supply and demand is that trading doesn't have to be fast, okay? It has to be slow trading, like slow cooking or slow thinking, slow yoga, slow life. I mean, take it easy, my friend. Take it easy, because you could die tomorrow of stress or heart attack, okay? Anything, hopefully not. But what I'm trying to say is that you don't really need anything when it comes to analyzing the charts, as you can see in the examples that I've been showing you. I mean, anything. It will just respect supply and demand analysis. Sometimes, obviously, they won't. Well, we're talking about probabilities here, okay? It's like the probability is like, I don't know, Albert Einstein with the law of gravitational laws, right? Or the physics, okay? Classic physics. So it's all about the quantum mechanics. Like light can behave like a particle and also as a wave. So what we see is the materialization of what an observer is watching. So quantum mechanics says that if there is not an observer, the universe doesn't exist. Okay? So the universe is like, our lives and all we see is like a probabilistic wave. Okay? Because now nobody's watching, but once someone watches, and there are experiments that confirm all this, all the probabilistic wave will disappear, and we will see a particle, which is one of these probabilities. Okay, so and that's light. Light behaves that way. That light behaves as waves or as particles, depending on the observer. So why am I saying this? Because trading is the same thing. Supply and demand, the same thing. Okay, it's the same thing. You are watching the chart, okay, and things happen no matter what. If you don't look at it, you don't know what's going on, okay? This is a very simplistic approach. If you look at it, you see what's happening. But even if you see what's happening, you will not pull the trigger here. I've seen many students in the past share with me analysis, and when I asked them about how they were doing, imagine that they took this trade, or maybe in the daily, the weekly, and the price was like there. And I asked them, hey, how is the trade going? No, I didn't take it. Why? Well, when price approached really, really fast, blah, 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 so I was scared, blah, blah, blah. So that's human being psychology, okay? You are scared, you are unsure, you don't believe in probabilities, but that's it. Life is just probabilities. The probabilities of taking a trade and losing or winning, of dying tomorrow for a heart attack, that's life. You just have to take the risk. So you analyze any scenario, many stocks or whatever, and then you come to a decision and say, the probabilities of this happening are very high, so I'm going to wait. But the probabilities of this happening are not that high, of rallying, okay? But it could happen, so I'm not going to take my risk shorting, expecting that this is going to happen. I'm going to wait, okay, for the pullback, because that's what we are expecting. I'm not assuming this, I'm expecting. So expecting versus assuming is completely different, okay? So I don't know why I started to talk about quantum mechanics and classic physics, but it helps because everything, the universe is like that. It's all about accepting what we have, that we don't know what's going to happen tomorrow, and we have to be very patient with our work, our trading, our wives, husbands, children, and that's it. We need to accept that this is life, okay? And I don't know. I've got here another one. I don't know. It's like last one. Gift. Let's say Lantheus Holdings, probably a biotech company as well. Not sure. Well, there it is. Look at that. Again, the same thing. And here we've got another one. Okay. Strong rally. Okay. That rally happened during the middle of 2022. Try to drop down there and it just reversed out of nowhere. There's no reason for this. Probably if you're using Fibonacci retracement, this is a 50% or 61%, 62. Okay, I don't know. I'm not using Fibos to trade. Okay, this is a Fibonacci retracement. Okay, a tool, but I'm using it to draw the imbalances. That's the use I'm giving the Fibonacci retracement. 1 second. So now you can see how important the Fibonacci retracements are to me. They allow me to extend the rectangle with the prices up and down for the distal and proximal lines. So now you know how important they are to me. So 0. I don't care. Okay? But it's great because I can extend the lines with TradingView. So that's the trade is trying to play out. This is an aggressive type of trade because it could drop much farther. So if you happen to be long here, I don't think you are long because if you're not following me, you won't be long on this one. But if any of the traders present right now are long, they should protect the investment, or at least the stop loss down there for a small loss. It was a good drop further. So, and this is Lantheus Holdings. What they are doing, I don't care. I don't care if the news are positive or negative. Well, let's take a look at the daily. And the daily, I think I will be able to see the news if I add the settings, news notification. So, well, why don't they show up? News. Oops, no earnings for this one. Weird, strange. Okay, no problem with that. It's just reacting to that monthly demand level you see here. Okay, I started to react for a week or two. Okay, so, and this is the power of the imbalances. So I just wanted to sum up with what I said before about patience and the art of waiting. Okay, in all aspects, all fields of our lives, we just have to be more patient. That's it. Enjoy life with our loved ones. And if you happen to be an intraday trader, that's great. You're making money, that's great, insane, great, I love it. Okay, but it will come a time where you're gonna have family. Maybe you're young and you can do that. And life is all about that. Love, family, having fun, friends, and intraday goes against all that. And if you haven't learned that yet, probably you will, and it won't be too late. So having said that, my name is Alfonso Moreno, and I'm here to help you. Okay, if you like this video, click on the subscribe button and the like button underneath, somewhere, whatever, Facebook, YouTube places it. Sometimes they change things, I don't know. So, and I will be glad to help you in your trading if you are ready for that. And if you need anything, just contact me, okay? I will be glad to help. I will be scheduling some more webinars during the year. Hopefully we'll see you there. Bye-bye.